Good day, everyone. It's Dr. K coming at you, as well as Gil Morales, and the markets look like they are trying to come out of this correction they've been in for the last few weeks. The S&P has been weaker than the NASDAQ, as it's still under its 50-day, and it remains to be seen if we're going to get followed or not. Yesterday, we didn't quite need 1%. Even need to
no,
see.
you're breaking up, Dr. K.
How's this now?
No, not hearing you.
Bizarre.
Go to the small mic. Maybe that'll work. We've been having this problem.
Yeah.
It's time to be calling a techie here.
It's really weird. Let's see. How's that?
That sounds fine. Yeah, we'll see what happens.
Okay. Well, so we got the S&P that's under the 50-day, and essentially we're looking at the possibility of a follow-through day here, but that needs to be accompanied by leading stock action as well. In this tricky market environment, there's
You're still, you got to get the hamsters to run faster, somebody says.
No, it's the only thing I can think is I mean, my broadband is coming in full blast, so I don't think it's an internet issue.
Yeah, I don't know what it is. I don't know if it's the fact that you come across from come from across the pond.
It shouldn't be, because we've been doing this for
wood. Yeah,
we've been doing this fine for a long time. It's only recently this has happened.
Yeah, you sound fine now. But I mean, what's your basic market message? Is that the market's trying? To me, the market looks like it's trying to turn, and I actually think that we're back in an uptrend. And I think the essence of all that is what's percolating under the surface. And you see a lot of stocks acting well, and you know the four horsemen. If you don't mind me taking over the wheel here, Dr. K.
Yeah, go ahead.
You look at stocks like, look at Netflix is kicking along today right here on my screen. Facebook is kicking along. Tesla just kind of hanging out. Let's take a look at a daily chart on this. And it's just kind of hanging out. Now, Dr. K, I got a question for you on this one. See if you can answer without warbling too much. But I look at this on a weekly chart. Here's a weekly chart. And I see one pullback, two pullbacks, and either a third pullback in here. I guess you might call this the pullback, and then a move to new highs. It almost looks like an ascending base to me, and it has been forming while the market's been correcting for at least the last 2 months, or I'm sorry, 4 weeks rather. And so, trying to finish this thing out. Do you think this stock can just rock higher from here?
Yeah, absolutely. It is an ascending base, and if the weight of the market comes off, then this one will probably be continue to be a leader, as it's been.
Yeah, I mean, what I'm looking at here is myself. I was actually going back and looking at that old chart of General Motors, and that was in the Forbes article that we wrote. Let me see if I can find it in here. What was that? Great Speculations or something like that?
Yeah. Sounds right.
Okay. Just give me a second here, everybody.
So, while Gil's doing that, tell me if I'm warbling, but the action of TSLA, which is the King Daddy leading stock of this market right now, the fact that it doesn't want to go lower, that it can go higher in this ascending manner, is obviously a sign of strength, internal strength within the market, and that institutions are very hungry for this stock. And you also see positive action in other names like Facebook and Netflix. and a host of others we've mentioned in reports.
Well, and LinkedIn as well, which is the, these are the four horsemen, and you're getting a pocket pivot buy point on LinkedIn, so that's a buy. I mean, it was amazing. They priced that secondary at 223. I saw that yesterday. Stock started trading after hours, I think below 232, and I thought, oh boy, this looks like Coors all over again. But the stock opened around 237, 238, and I thought on that basis this morning it was probably going to be viable. And of course, stock's rocketing higher, 244.35. It's headed through 250. I'm going to say at least 260 in short order. People would love to buy it at 223. I saw 223. Somebody's saying 233. What was it? Was it 223 or 233? All the reports I've seen were 223, which means that they wanted to unload those shares because they want that money, I guess. But I was going to go, here's this article that Dr. K and I wrote back on June 3rd. And we showed the chart of, here's a chart of General Motors back, and this we likened to the breakout point in Tesla around 45 bucks, and then you run up. And then the one thing that's different about today versus this period is that World War I started in here. And so the market corrected, and General Motors came in with the market. You had a bear market sort of environment for a period of time. And they shut down the exchange during this period, which I guess was in 1916. And then the stock came out. But let's pretend that this, with Tesla, if we're likening this to Tesla, take this part and erase it and then move the chart over so that you continue. This point here connects with this point here. And if you look at this, you can see General Motors did this sort of ascending pattern, and then it just launched much higher. So I might postulate that there's potential for Tesla to do something similar. And so on that basis, you can't really count the stock out, even though it's had a huge move, because from here I think General Motors went from 34 to about 80, I guess. And
yeah, and that was an ascending. That was an ascending base that it formed because the general market was going sideways to down, and then in August of 1914, trading was halted for basically until the end of 1914. So you had that ascending base, which was your big clue, and then when trading resumed at the start, well, really at the end of 1914. The market then went sideways again for about, all the way into early March. So for about 2 months it was going sideways, and yet you can see with Tesla, with General Motors, it was actually forming another ascending base right after trading started up.
Right.
Yeah.
So, and it launched from there, so...
we had a market until end of 1915. The market was straight up, and General Motors straight up.
Right. So we had a poor market during that period, and once the weight came off of that, I guess the stock was free to rock and roll. So when you look at Tesla today and you wonder, what is the potential here? Is it over with? Has it topped? Everybody wants to still try and short it. My buddy over at the UBS on the retail side tells me that their guy is still shorting it. They've been shorting it for the last 60, 70, 80 points, and they continue to short it. But to me, that's just what dumb retail brokers do. Big egos think they're smarter than the market, and that's where you end up with that kind of stuff. But today I like LinkedIn here. Another one that's been rocking, Yelp. And we've been talking about this. We've been following this actually in the chat room as it sits along the 10-day. You had a nice move in here 5 days ago on the chart. I believe that was last Friday. Is that right? No, that was last Thursday. And then, of course, the market came in a little bit. So it pulled in, but held the 10-day, so looking good. You got another chance to buy it as it pulled in, and boom, we're launching. Once it gets above 59.35 is the peak here, and I guess a dime, 59.40, that's when all the IBD people will come in, and IBD will say it's a breakout. But I think it's already a breakout. You could draw a... well, I thought it was a buy along the 10-day, but I think you could draw a little trend line there, and you're moving. This looks to me like it wants to go higher. This is a high tight flag on the weekly chart here, and you held tight. You had some tight action in here, supporting week here, as it pulled down and came into the 20-day moving average. And so this looks pretty good. Another one yesterday, and I'm just going over some stocks I liked. Trulia, which had a viable gap up and failed, and then really failed. Of course, it shakes you out here, and then just to tick you off, it goes back to the highs, and then it breaks down. But you basically undercut this low now. You get a little movement up to the 10-day moving average. It sits here, and then boom, you get a pocket pivot. Again, this is sort of a high tide flag, and it looks like what happened here. And I think it points out that when you're looking at stocks pulling back, you not only need to watch the 50-day moving average on the daily chart, but you have to be watching the 10-week moving average on the weekly chart. And sometimes they will pull into the 10-week moving average, as Trulia did, and sometimes they will be pulling into the 50-day moving average. So you can even see that. And this is probably hard to pick off, but notice Tesla all the way up, then it had a pullback right to the 10-week moving average. That was the first pullback to the 10-week moving average in the whole run. So actually, that was a buy point, even though it might have been hard to buy the stock there on that, with Goldman Sachs hammering the stock with their brilliant analysis and price target. I guess they raised their price target to what, from 65 to 85, even though the stock's trading above 120 at the time. I think it's interesting, though, that Goldman, I think, also made the loan to Elon Musk when he bought all that extra stock back here when the stock was around $90 down in here on that secondary. Kind of seems interesting that they loaned Elon the money, but here they are trying to smack the stock down. Probably knew they were buying it on that pullback. But anyways, going through my list of hot stocks. Groupon gapping up today. Is that a viable gap up, Dr. K, or do we not like this stock still?
Well, it's the third gap up in recent price history, and just looking at it, the earnings and the sales are real troubled, and the pattern is troubled as well. I see it, just given the nature of it and how competitive it is, the space is. I mean, just the overall technical pattern is far from ideal. So, if you had bought that prior gap up, then you would have gotten taken out, and the same thing could easily happen right now. I mean, if you want to buy it here, your risk in buying it at this level is pretty low. I mean, we're talking 1 to 2%. Yeah, very minimal risk here. So, if you think it's going to go higher, you could go in with a position.
Well, here's something to think about. Groupon made 2 cents in the most recent quarter. Yelp lost a penny. But there is another issue here, and I think that you're probably seeing much. Groupon sales were 7%, and Yelp is sales were up 69%. So, and it's a slight acceleration over the last 3 quarters.
Yeah, Yelp is much smaller, of course. It's Groupon has an order of magnitude more sales, so you could say it's more of the leader in the space. And its market cap is about 3 to 4 times as big as about twice as big as Yelp, twice as big.
Yeah, so it's a slower mover. But it is interesting. I think the group is strong, and that whole group includes Facebook, which is continuing higher today. What are some of the other names in there, Dr. K? What happened to Zynga? Just check. Oh yeah, I remember some guy telling me that he had bought Zynga at I think it was $6 a share, $5.50 as a long-term investment. So how's that working out for him? Not too good. So nothing is ever a long-term investment. All right, cruising down through my list here.
It's a pretty tough space in general, this internet retail space, what they're trying to do, because it's so crowded. And yeah, my gut feeling the technicals on Groupon don't really impress me. I think there's a lot of, it's going to be a bit of a sloppy ride if you try to play this one.
Yeah, it has been already, yeah, definitely. Canadian Solar making a turnaround. That's kind of interesting, I think. I don't know if you hit a pocket pivot on this day. It looks like it did, just barely. And so you had this little weird-looking pocket pivot here, but it's got a thin little stock. But I think what this tells you that you might watch First Solar, Solar City. I've been talking about these as shorts in the chat room. It might be time to like bag some profits here if you've been short these, and I think you're in position to bounce here. Gigamon, here we go. Gigamon right off at the 10-week moving average, and kaboom! It's rocking today, making pushing for new highs. Just barely missed a pocket pivot yesterday, but it's a little bit V-shaped. I would have expected it to find some resistance in here, but maybe it's just going to charge to the top of the pattern now. It's a little loose, so yeah, I'd like to see it tighten up, but let's see if I can magically make it look less loose. See, that's amazing. That's what it looks like if we blow it up. Some tight closes in here along the 35 level, a little above, and now moving higher. Volume is picking up, I think, today, but it's not exceptional. It's minus 37% right now, so a little bit on the light side, I think. We're talking about Trulia. You had the pocket pivot yesterday. Stock pulled in a little bit, and I think that's where you get your chance to buy it and move it out. I like Splunk as well. I like the fact that it had the Bible gap up, holding up in the top part of its range is very tight. And I know that that might look scary to buy. You might feel better if it was doing that down here, but the fact is the fact that the stock is able to hold up tight at the highs of the gap up day, in my view, is a sign of strength. Dr. K, your thought?
Yeah, this kind of tight action, obviously, it's what you want to see, and buying it at this level, of course, your risk is going to be in the neighborhood of 7 to 8%. So you might go in with a smaller position if you really think it's going to get away, or you can wait for it to clear the high of the gap up day. Or also in market weakness, it might pull back in a constructive way, allowing you to get in at a less risky level.
Or you could take the Manic Gill approach, and what you could do is just go in heavy here and use the low of 3 days ago at 54.50 as a guide for cutting your position. Because my theory, and this is how I'll operate here, is I'll go in heavy on this one, and my theory is that this thing has to have some upside momentum from here. Therefore, given the fact that I consider this to be a display of strength, I'm expecting this thing to hold this and move higher. So I go in heavy on the basis of that. If it doesn't happen and it breaks, say, below this low, let's say I got a 90% position here, and I may cut it back real quick to 30%, or I may just blow the whole thing out and rethink it, because my theory, based on what I'm seeing in real time, which is the strength here by holding at the top of the Bible gap up day, it doesn't pan out. So that's kind of how I'll operate. If I take a big position, I have it set. I have it set in my mind what I'm expecting the stock to do based on what I'm seeing it doing in real time. And if those expectations are wrong, in other words, my theory is wrong, then I will back away and rethink it. But so far, the stock is proving me right so far today. You guys can all get out there and buy some more and push it up.
Yeah, always know what your downside is in any position you initiate, and if you're going to go in big, whatever is big for you, say a normal position would be 25%, and you decide to go in at 75%, obviously know where your exit point is going to be, and be there in real time in case it's hit, in case that exit point's triggered. So if you're going in with a whole hog, say it's 75% of your account or more, and your exit point is 3% away, you know exactly what your risk is to your account, and it's up to you to decide whether you can take that risk or not. I think for most people, a 3% loss is probably something manageable.
Yeah, and so, but so you got varying ways to handle it. Anyways, let's see, where were we? I'm gonna just somebody asking, where is the top of the ascending base? Well, I think this is the top here around 160. So you're well within range. I'm kind of looking for some kind of pullback in here. I want to be opportunistic, and I'm just kind of waiting to see if there's some kind of pullback in here, and I might buy into that. But it's not like I really need it when I've got some other stocks that are cruising for me. So it's I'm not a big hurry necessarily to buy it. Maybe the stock will form a longer base here. I don't know, but I'm looking for some indication that I can buy it. The last place to buy was off the 20-day moving average. Kaboom! And I was going to actually mention also, look at Groupon. Where does it find support at the 20-day moving average? That's a 20-day exponential, by the way. We talked about Gigamon. Kihu is, this stock doesn't want to die either, and it's been acting pretty well. It's just an ascending sort of pattern. It's not an ascending base. You don't have the pullbacks that you need to see in the pattern, but it is acting well. You can't really fault it, and continuing to go higher. So there's another leader. Yandex, people ask about. I think Yandex, I think this was a pocket pivot yesterday, and somebody asked me this in the chat room, and I thought you could buy it on that basis. It looked like it because what you're doing here, notice how I color code my things, my charts based on the open to close. So it gapped down 5 days ago. I guess that would have been last Friday. And volume picked up heavily. So I don't actually, when I look at a pocket pivot, I don't look at this necessarily as a down volume day because the thing gapped down on the opening. You can see the tick here where it opened and where it closes up here. So it was really an up day for the stock. And so I look at yesterday as being a pocket pivot, and here we're going higher. So it looks good, And again, you could have been opportunistic here on the pullback to the 10-week line on the weekly chart, or getting close to the 50-day on the daily chart. So, Dr. K, are you talking? I hear some voices back there.
No, don't worry. Just have some friends over.
So, okay. GME had a Bible gap. It's failing, but notice it's trying to hold the 20-day. So GameStop. A lot of these stocks have been acting well. The gaming stocks, and there's been a couple others that have been looking pretty good. But let's see, Lock. Some people were talking about this on the. This is LifeLock. I've sort of liked this. I didn't like the fact that their earnings were down like 75%, negative 75% last quarter. So I didn't really care for that. But stocks continue to go higher. I think it might be an interesting long-term story, but I would like to see, number one, higher price stock and better earnings. But it's working pretty well. YY is another one. I think you buy this on weakness. You could consider this day, it opened up slightly and closed, ran up and then closed down at the lows, but it was actually up on the day, I believe. And you could consider this a pocket pivot. YY has had a nice move. Nice. This looks pretty coherent on the weekly chart, and so it might be setting up to go higher. Great fundamentals, so this one looks okay. And today you're up, and it looks like you're trying to work on some sort of a pocket pivot. I don't know. Is that too extended, Dr. K?
Relative to the overall chart, it looks okay. So it's still an actionable territory, given all the fundamentals and everything.
And this thing can get a lot of momentum going in the upside if you like that kind of stuff. Let's see. Somebody's asking on Yelp, given your buy on weakness, sell strength stance on market, do you take profits on Yelp at old highs here? I'm sort of looking at what I want to do here. The luxury is I'm way up on a position, so I don't really, I got some room to think here. There's a couple things I'm thinking about right now. And that is if we get to the old high at 59.35, then you're going to get some impetus from IBD buyers because IBD will be saying that's your buy point on a breakout from a cup base or something like that. The other option here is that it could form this sort of a little cup thing, and it might form a handle. So it might go stop position looking for it to go sideways, or the other thing is it could just head straight up because as far as I'm concerned, I drew that trend line across the peaks here. This is a trend line breakout, so this thing could get moving. So I'm sort of watching this. If the market turns and gets back into an uptrend, I think that you have some potential to really get a hop into the upside, at least get through 60. But I might cut it back since I am pretty heavy, and I do that. I take partial profits. It's not a perfect scenario all the time, but if we look at Yelp, couple things I'm watching at right now in real time is if I've got a stock with a lot of momentum using my 620 chart, I may take a sell signal here as a reason to cut the position maybe by a third or by half. But that depends. It depends on what's going on overall with my other stocks. And right now I've got everything firing on all cylinders, so I'm not really too concerned yet. Chances are if I do sell any, it will go through 60. So that's the the other side. The market knows what I'm doing at all times. Anyways, I think Melli, Mercado Libre, I like the way the stock. You had a viable gap up, but it's some overhead from the left side. It's a volatile stock, and it pulls all the way back into the 10-week line, just above the 50-day on the daily chart. You had a pocket pivot. Where did you have a pocket pivot?
2 days ago.
I guess here. Yeah, 2 days ago, I guess you did. Here. Did it close above the 10-day? Just barely missed it, but it closed above the 20-day. So it looks close enough, but here, someone was asking, I remember before here, this is too soon because you're just down kind of V-shaped, so it comes in some more. I think this one looks like it wants to make a turn here and go higher. So I kind of like this here. You could buy it on the basis of this pocket pivot. It should hold the 10-day and 20-day confluence. Stocks, these are some others people are asking about. Sprouts Farmers Market. I got to tell you, that's a great store. They've got some great stuff. They've got some a lot of gluten-free stuff, just piles of gluten-free stuff, and I kind of feel like a kid in a candy store in one of those stores. But seems to be doing a good business. But like I said earlier, I think biotechs and technology stock or technology is where you want to be right now. That's been the strongest area. This is at the bottom of its flag, so maybe if you want to nibble on some here and buy it along the lows, if you think this is a sound story, you could do that, I guess. Interesting.
These types of markets are doing. If you look at Whole Foods, that's a $20 billion company now, and Sprouts Farmers Market sounds like it's trying to follow in its footsteps.
And TFM though, Fresh Market Inc. Gap down. Not doing so hot, but I think the hot one, SFM might be the one to be looking at here. It's still, it had a huge move after it came public, so it's entitled to back and fill. You look at the weekly chart, and it's not. Maybe if you saw some tight closes along the lows here or something, but you do see volume drawing up, so it's kind of premature. I tried buying a little bit in here, but it didn't seem to have any thrust, so I just got rid of it. So the other thing, it's not marginable right now because it's. I think they don't let stocks become marginable until after 30 days of trading. So, maybe this thing gets more popular when it's marginable, but I don't like using up cash and buying power on stocks that are marginable. So,
also on this Sprouts Farmers Market, the sales are very robust. Because it's a smaller company than the Whole Foods.
Yeah.
Now, what was that other ticker you just pulled up?
TFM.
TFM. If you look at if you look at those sales, they're not nearly as strong as the SFM.
Yeah, and so the SFM, 45% increase in sales, 622 million, earnings up 200% in the most recent quarter. I really think what's going on here is you had this massive move, and it's just working on this. So, like I said, if you want to try and nibble along the lows here, I think your risk is relatively minimal. The other thing is watch for some sort of pocket pivot coming up through the 10-day moving average if you want to buy into strength. So, anyways, NPSP. This is NPS Pharmaceuticals. It's a no earnings pharmaceutical stock. It's been acting well. It's kind of reversing today. I think some of these other big ones, Biogen, Celgene, anything that's showing earnings. Even Regeneron came back with a pocket pivot on Wednesday, and it was looking pretty grim before that. It was actually, I thought it was a short, and then once he broke down, it looked to me like he found support here, and since then I left it alone using a trailing stop at 240, and it's now trying to go higher. Maybe it sets up in a base and flies out of here. So. I think I like some of these others that are, ACAT also is hanging in there tight. That looks decent on the weekly chart, So there's a bunch of them. There's Insight, INCY had a viable gap up. It's holding tight in a flag. There's this Celldex Therapeutics. But again, these are things with no earnings, and there aren't any buy points here that I can see on NPSP. You have a pocket pivot here on Celldex, but it's no earnings. NPSP, I think, looks like it had a pocket pivot yesterday, so it's moving up. So that's where you'd want to be trying to buy it, is in there. But to me, they're riskier, and since there are other stocks that are working that have strong earnings and sales, I prefer to keep things there. So Somebody asked about XON and Trexon. I don't know. I'm not really interested in this. Losing money hand over fist. Tiny stock. I need to see something. I don't see any sponsorship numbers on it. They're going to make 7 cents next quarter allegedly. You know, I don't. It's a medical research company. I guess they make DNA and gene programs using its suite of proprietary and complementary technologies. So, you know, I don't know. It's not what I'm going to buy here. So I don't think I'd mess with this. That's kind of a steep drop too. You know, 31 down to 21. That's pretty weak. So it's very speculative. Came public at 16 bucks and jacked up here and pulled all the way back here. So hard for me to say, you know, whether I'd want to buy that one. Somebody asked about Qcore. Bought on the pocket pivot. You know, one thing that I didn't like about this is that you had this breakout, and it was a pocket pivot breakout. But the problem with this, and my approach on something like this, let's say I bought that one, okay, but there's a couple of things that I have to keep in mind. Number one, it's a pocket pivot breakout, and volume was not above average. If this is a flag formation, which it was tight here for 3 weeks, and then you had the breakout here, you should have seen some volume in there, and you didn't. And I would have liked to have seen a pocket pivot breakout occurring on heavy above average volume. So I think that becomes problematic. So when I see something like that, if it doesn't hold, I'm just going to sell it. Now notice you're pulling back to the 20-day, so maybe it's going to pull an Aquin and, you know, do that, and then find support at the here's Aquin having a pocket pivot breakout. It failed, and then found support at 20-day, and here it goes again. So I think I'd look for another pullback in this if you want to buy Aquin Financial. But I think that's, you know, the issue that you have to be aware of when you're buying some of these things on a breakout, and especially during a period where the market's correcting, because the odds are against you when the market's correcting. Things will tend to get dragged down by the general market action, so things won't work, and so you have to keep that in mind as well. So, you know, what do you do here? And it's dancing. Someone says it's dancing on my 7% red line. I would say see if it can hold the 20-day. You know, I don't think you're trading heavy volume. For all you know, this thing becomes viable right here. And remember some of the things I've been talking about in the chat room, such as the ugly duckling formation, where stocks start to look ugly and then they turn around and go higher. You know, like this. This looks ugly. It's like, oh my God, it's going to fail. Turns around and breaks out. Triple D, you know, fails on heavy volume, starts to look ugly, turns around and breaks out. And so, you know, that might be what happens here. So, what is somebody saying? Celgene has a PUFDA date of 9/2. Not sure what that means. Let's see. Somebody says, I got shaken out on Kihu. How do I get turned around and get back into the stock? Well, I would say if you got shaken out, what you need to do is buy a time machine and go back in time and buy it back here. Otherwise, I don't know how you get back into the stock here. So it's extended at this point. There's no real buy points. But, you know, it's possible you could have been shaken out. But that was a secondary. I think they announced a convertible bond offering. And so that might have... you might have waited to see how
in those cases, you might want to give more flexibility to what the stock does, because these types of offerings tend to drag the price down momentarily.
Somebody says, you seem to be focusing on Chinese stocks and small companies with little to no earnings. Is that because you do not see any value in institutional quality stocks? I don't know what you're smoking there, but if you're paying attention to what we're talking about, you know, LinkedIn is an institutional quality stock, Facebook is an institutional quality stock, Tesla is an institutional quality stock, Netflix is an institutional quality stock, Trulia is an institutional quality stock, as evidenced by the fact that you're seeing Fidelity Contrafund and some other Fidelity funds plowing into the stocks. We're looking at SFM, which has strong sales growth and 200% earnings growth in the most recent quarter. You know, looking at Splunk, which beat on earnings and strong stocks. So I'm not sure what you're talking about that we're focusing on Chinese stocks and small companies with little to no earnings. I look at the chart, and if the chart tells me that something is going on, that's my first guide. If you want to start, wondering whether something is a small company or a big company or not, if it trades enough shares and it has what I'm looking for, I'm going to come in and buy it. So I don't really see any of these as Chinese stocks. YY is a Chinese stock. That was the only one I talked about. I think maybe I mentioned this one too. So there's two whole Chinese stocks, but Yandex is a Russian stock, and that one's acting pretty well. And these all have decent earnings. Celgene. I'm just going through everything we're talking about, so I'm not sure where you get the idea that we're talking about Chinese stocks and small stocks with no earnings. So anyways, maybe you just showed up on that one stock. Dr. K, what's your input on biotech ETFs?
Well, it's like with all ETFs. If the group is leading, strength begets strength. So you could create a series of buy rules for handling that sort of ETF. It's just like we created buy and sell rules for handling SLV back in 2011 when it started to break out.
Dr. K, which is it BBH?
Yeah.
Yeah, BBH. You could buy that if you're a wimp, I think, but I would go with the stocks.
Yeah, I mean, it's these types of ETFs. They're comprised of so many stocks. So the best you can do is hope to outpace the general averages by some small margin.
Yeah.
And if the group is really taking off, then you're really better off buying the best names in that group.
Yeah, I think so too. Anyways, but if you like the slow route, I guess you could do this if you see a group acting well. Somebody asked, is the model close to switching? Last I checked, it was about 3 millimeters away from switching to a buy signal. But Dr. K, what's your latest measurement on how close you are to switching?
Yeah, you never know. It's futile to really guess these things because the market, we don't know what's going to happen tomorrow or the next day, and you just go with real-time action, and that tells you all you need to know.
Yeah, pretty much. So and an idea that you're close to switching, like I think I made a joke of that in the chat room yesterday. If you could tell us within plus or minus 5 centimeters how close the model is to switching. It switches when it switches, I guess. I don't know if you can measure how close it is. And if you could measure how close it was, and it was really close, what does that mean? Would you go ahead and start buying an ETF? I don't think it operates that way. You either have a buy signal, a neutral signal, or a sell signal. I don't think there's a really close signal. At least not yet. Maybe you need some more refinements there.
Over the years, I've found that I've obviously tried to see if I could position size the model depending on what I perceived as the strength of the signal, and I've never come up with anything. Some of the worst or most questionable buy signals or sell signals sometimes lead to the biggest profits. Because obviously, the model's seeing something that in terms of internal market internals, and sometimes you're going to get a massive rally out of it, like October of 1999 when O'Neill was ready to throw in the towel, and so were the rest of us. And within 3 days, the market turned on a dime, and we didn't know the market would be as strong as it was, but it was. So we all found ourselves heavily on margin within a few days of that buy signal. We just let the stocks tell us what we needed to do with our own portfolios, rather than trying to predict or project our own emotions onto the market.
Yeah, it's like the other day someone asked me about, when was the last time you saw the window of opportunity open wide? And I have to say something. I think that whole concept of a window of opportunity that you can determine how wide it's open, that whole thing feeds into some idea that you can determine ahead of time how much money you can make in a particular market environment. I think in May, when Tesla launched and gapped up, that was a huge window of opportunity that was wide open. In October of 1999, if you had told me, I think at that point I was up 32% for the year, if you had told me in the next 2.5 months, or 2 months really, on October 27th, 1999, that I was going to be up 1,000%, and you asked me how wide the window is open, I wouldn't be able to tell you. I think that whole concept is just, people want to slap a label on a market or something and say, oh, it's it's wide open, so I don't have to think, I don't have to work. I can just go flying through the window and I'm going to make a pile of money. It doesn't really work that way. And I think the same thing with, can you tell if you're close to a buy signal in the market or what? Is it safe to buy?
In hindsight, like in late 2006, you can say, well, my account was up over 100%, well over 100%
Right.
in 3 months. Therefore, the window was obviously open. And while I was in that situation, say halfway through it, yeah, this market was incredibly strong. It was the best it had been since 2003, and I was just furiously buying the best names and then cutting back on the weaker ones. And
Right.
it's just a very dynamic process. And before I knew it, 115% in 3 months, and that's fantastic when you can then look back and say, okay, you did the right thing. But to predict such a window, or the best you can say is, yeah, I'm in the middle of making a lot of money. This market is strong. That's the best you can say.
Yeah, and you know whether the window is open in hindsight. Anyways, Dr. K, here's a question. I don't know how answerable it is. Can you elaborate on buy and sell rules for ETFs?
Yeah, sure. If you got an ETF that's a focused ETF, like silver or gold, or even the biotechs, and you wanted to play in a conservative way, you could create buy rules that say you're going to buy a certain number of shares every time the ETF goes up a certain percentage. And what those variables are depend on your risk tolerance levels. And then, of course, you obviously have exit rules as well. So, that as far as ETFs that are more in keeping with the market direction model, which are very broad, like that cover the S&P, the Dow, or the Nasdaq, again, you could create similar rules, but I've never bothered, just because there's just so many better ways of making money, of creating time value with your portfolio, rather than trying to pyramid in position size, triple Qs or the spiders.
Let's see. John, our good friend John Teed. I think I'm still recovering from that night in Las Vegas, John, at that bar. But anyways, Dr. K, John asks, initially you would alert subscribers to standby signals from the model. You haven't done that for 15 to 20 months. Why?
Simply because, and I think we talked about this in reports and also in the FAQs, simply because quantitative easing has changed the dynamics of the way markets trade, and so the model is very well aware of that. And to go to a standby sell signal in this kind of environment is not helpful. It doesn't. It only it's only added noise to the situation we're in. So when things revert or start to revert back to a more normal, in other words, when quantitative easing starts to fade, and we get to a point where the strength of the economy can take over. So in other words, we're getting back into more normal periods, then I wouldn't be surprised to see that old rule reactivated.
Okay, there you have it. Somebody wants you to go through some stock or ETF charts and give some of your commentary perspective for us rather than just the indexes. I'm not sure.
Sure.
Kind of
Pull up a stock.
Well, let's look at some. Wait, we've been talking about several, so I think we're kind of in that realm. Noodles. I like Noodles. I like this pullback down to the 10-day moving average. I don't think it's marginable, however, but I like this pullback after running up, and you probably have a pocket pivot. Noodles was started by the same guy who started CMG. Last quarter you saw earnings up 30%, sales up 18%, starting to reaccelerate. Next quarter they're expecting 267% earnings growth for the company. So I guess this is another one of those Chinese or thin small stocks with no earnings or sales that somebody was saying that's all we're talking about, but they're obviously not paying attention. But Noodles looks fine. I like the pullback here. ACT, Actavis, another Chinese thin stock with no earnings or sales. Had a pocket pivot yesterday on a breakout, continues to move higher. We mentioned the stock back here when it came out on a pocket pivot. Had a couple in here, and this is looking pretty good. These guys who did they buy out, Dr. K? I forget. 42% earnings growth in the last quarter. Sales accelerating up 47%. you basically have a 3-quarter acceleration in earnings going from -10% to +21, +42. Next quarter, Actavis is looking for +54%. Sales have gone from 1324 to 47, so that's actually looking fundamentally pretty good. So if you got in on this pocket pivot, I guess you're adding to the stock in here. It looks good.
They had a
CRUS.
They had a settlement agreement with Actavis, what is it, Avenir.
Avenir, that's right. Okay. Anyways, let's see where are we going. Somebody's asking about Cirrus. It's still bottom fisher. You know, if you like to buy these kind of things and you think it's coming back, you know, just like Apple could have been bought back here when you had this Bible gap up, it started this whole move. You know, I guess you can try that stuff if you want to, but there's other stocks I think that look better that I'd rather be in. So if you think you're good at figuring out when something has bottomed and it's heading higher, then I guess you could go for it. You know, you do have this, I guess you could call this a bottom fishing pocket pivot in here, and you could try and buy it on that basis. So if you understand it and you think you can pull that off, you have some signals there you can act on. But, you know, earnings are up 155% in the most recent quarter, so maybe it is trying to turn around. But next quarter, they're looking for negative 23%. So, I don't know. I guess for my money, I'd stick to some of these other leading stocks.
Yeah, I mean, these are slower, more junkier names, and so you're going to run more risk.
Yeah.
You know, if you're going to play these, my advice is to get in where you know your risk is limited to, say, within 5% or less, and go in with a bigger than normal size position and play it for swing trade, because this stock is fighting a lot of overhead resistance. So if you're getting 2 or 3 up days in the name, I would just cash out.
That's on Cirrus, yeah. Let's see, Nu Skin has been, I like this thing, it's been holding in tight. Notice the tight closes, you get a little shakeout down towards the 10-week moving average on lighter weekly volume last week. Here's what it looks like on the daily chart. Coming up through the 10-day moving average today, maybe on track to pop a pocket pivot. Let's see, what do you need to be above here? 1, 2, 3, 4, 5. It looks like
683,000.
So right here, this day, correct?
Yeah, I mean, it looks like it could do it.
Yeah, and so it's, what are we trading right now? We're trading 401. It's 919. Yeah, I think it could be done. Sure. Looks on track. Let's see. Any financial stocks that are better positioned than versus others? I'm not really into financials right now. I mean, M&T Bank has been good, but it's pulling in. Goldman Sachs is weak. There's a lot of financials just kind of look feeble. I guess if you're looking for some of these, look at Eaton Vance. That looks feeble. I don't think that's a group to be going after right now. I think you want to be looking at technology, internet, biotech. And that's where I would stay. Is there a minimum for fund ownership that you look for? Not really.
It's more the trend.
It must be 22.78652 funds must own the stock. No, it's really not a quantitative thing, okay? It's more a qualitative thing. You want to see a fair number of funds buying into a company, and particularly after it comes public, you want to see some decent institutional sponsorship. So, for example, if we look at let me see if I can find something that's been a recent IPO. For example, let's take a look at this Noodles. Okay, Noodles has 129 funds in it, and so you've got some sponsorship in there. Okay, if we delve into the sponsorship, we can see that Fidelity Contra Fund, Fidelity Balance Fund, Fidelity OTC Portfolio all came in and took positions. So I think in general, this looks pretty good. As far as the sponsorship. So that's really, there's not a huge number of funds, but what I'm noticing is that you're seeing quality funds coming in. I always watch Fidelity Contra Fund. You guys know that. Will Danoff, who's the client of O'Neill, probably still is a very smart guy, and when he's buying something, I'm definitely interested. I think in Noodles, for example, they come in, they're buying, start out with 85,000 shares. That's the very tiny position, but if he's interested in it, or these quality funds, and there's a number of other quality funds in there. RS Small Cap Growth Fund is rated A+. The Fidelity OTC Portfolio is rated A+. T. Rowe Price Small Cap Stock Fund A+, Vanguard Explorer Fund A+, Janus Venture Fund rated A, Oppenheimer Discovery Fund A+, Invesco Small Cap Discovery Fund A-, Fidelity Growth Company Fund A+, Prudential Jensen Small Company Fund A-, UBS Small Cap Growth Fund A+, Loomis Sales A+, Ivy A-, Franklin A+. There's a number of A-rated funds that are in this stock. So, on that basis, I think this is a quality institutional company. And so they're coming into it, and I think I like this pullback into the 10-day. I think the stock is viable. So, sorry. Anyways, let's see. Going. If there are so many funds in NDLS, why is the volume not higher? I think it's pretty decent in here. I think you still have to wait. Let's see. Let me see here. Average daily volume right now is 839,000 shares. So it's actually not too bad. If you look at this move here, as it moved up to the peak, the volume there was 665,000. It seems to be on track. These things you should see volume increase. You should see average volume increasing over time over the next few weeks. And I think that that would be the trend you're wanting to see. But what I like right now is what I see initially following the IPO, and within 2 months of the IPO, I think that looks pretty decent. So, I'm a buyer. I like the stock here. So, anyways. Coors is the name that comes up. It's acting well. Didn't really get the breakout here myself, and the stock continues higher, so it's acting pretty well. So my daughter did pick that for her economics class somewhere down in here, and she's doing well with that. But market's in an uptrend. Anyways, where are we? Lionsgate is a name that comes up from time to time, and it's just continuing higher, really nothing there. Google, notice some of these, it's trying to turn off the bottom here. Another one to keep an eye on, I noticed, is Amazon. It had this breakout here, so here's the base breakout. It pulled right back to the top here. I noticed you're having a shooting fest over there, Dr. K.
Yeah. Well, like I said, I got some friends over, and they're taking pot shots at each other.
That's good. Okay, that always.
Got a little shooting gallery in here.
But I noticed Amazon, you had this sort of weird-looking pocket pivot down here 3 days ago as it came back above the 10 line and came all the way back down to the breakout point and bounced off. So you're seeing some of these things, these big-cap NASDAQ stocks. Look at Priceline going tight sideways, trying to flash a pocket pivot in here. Let's see. Let's go through some other. I noticed this AVG. We noticed a little pocket pivot here. This is these guys do the AVG Free, which is the antiviral software that I like to use because it's free. And look, Noodle's starting to move. Everybody's buying it now. I tell them I like it. Okay. The other day I told everyone in the chat room that I was getting sushi for lunch, and everybody ran out and bought sushi for lunch. That's a joke. TRN. Yeah, TRN did have a pocket pivot. Trinity Industries. I noticed this thing had a big pocket pivot here. Sorry. Okay. Nice on that one. Okay. You had this big pocket pivot here coming up after earnings, I think it was, and so that was a bottom fisher, but the market got weak about a month ago, and so stock kind of back and filling. But notice how it's worked its way higher, and you had another pocket pivot here yesterday. So stock looks like this, trying to build a base. Looks like a big ugly double bottom right now. Some of the transports have been turning. I'm watching also the rails because TRN, I believe, is in that realm. They're also, I believe, transportation equipment, that they do rail cars, barges, highway products, aggregates, wind towers, all kinds of fun stuff. But, looks like it's trying to turn, TRN. So there's a pocket pivot. So The person asked, do you see this as representative that transports are back and the leading indicator the market uptrend resumes? I would watch for that because I think that would be some confirmation of strength in the group, and TRN might be an indicator, but it's not only related to rails, it's also related to highway construction, inland barges. So you might think of it as an infrastructure stock, and maybe its resurgence here as it sets up again in a base and provides you some early buy points might be an indication that things are perking up for them. Anyways, Dr. K, please provide any relevant insight into near-term headline events regarding, say, QE tapering, Syria, Merkel election, Euro recovery.
Well, it comes back to price volume action. If the news is perceived as good and the market doesn't act in kind, then that's a weak sign that the market's telegraphing that not all is well, and vice versa. If you have bad news and the market seems to buck the bad news without any issue, and you still see leading stocks acting well, then that's a great source of strength internally in the market. So always take news in context with what the market's telling you.
Yeah, you know what I think? I'm going to stick my neck out on this one. I think the whole Syria thing is much ado about nothing. I think obviously Obama is looking for political cover because if they do something and it turns out to be kind of stupid, then if he gets Congress's approval, then they can blame Congress, and Obama doesn't have to shoulder the blame. So again, I think he acts mostly as a politician. Therefore, I don't think you're going to see much happening. I think a lot of the fretting and the fears over the whole Syria thing, and if we do something, I think it's kind of overblown, and I think the market ultimately will shrug that off. If it creates any sell-off in the near term, I would be looking to use that as a buying opportunity, and that's the way I would approach it. I think so far it has proven itself to be a buying opportunity. So, I don't know. Somebody just asked a question. Rule change, so down days in red are not down days if it closes on the high side. That's not a rule change. I think I just showed how, and I think it was on the Yandex chart. I'm going to digress here for just a second. On the Yandex chart, how I color code my charts just so that I can see visually that this was heavy downside volume, but notice that the stock closed lower and opened higher. So in that sense, I might interpret that as an up day, an up volume day for the purpose of discerning whether this was a pocket pivot. So it's more of a judgment call, but I code my charts so that I can look at them quickly and make that sort of call if I feel it's warranted. So, that's a drill on that one. But it's not a rule change. It's just something I do. But I think, Dr. K, you do that too in a pocket pivot. If you can adjust the volume. Like, I'll go back. Let's look at this old example. Right here, you had a pocket pivot in Regeneron here, but notice it was within, I think, 9 days that you had this heavy volume here. You can see how this volume is higher, but notice how the way I color code my charts, that was a blue day, an up day, because it gapped down and then closed a little bit higher. So in that case, we made an exception, and that became a pocket pivot, and I think Dr. K does that as well. Let's see. Lashana Tova by Yom Kippur. Yes, I am actually an honorary Jew. I did not have my Yom Kippur gluten-free bagel and lox this morning, but I will work on that later. SNDK short. No, I'm not. It does look like a Head and Shoulders, but I'm not interested in the short side right now. It's also was it really a bad? It's kind of a big leader. I don't know. If you think you're going to make money shorting in this environment, if the market continues higher, you could try it. But and you got a clear stop at say 58.39, maybe 58.49, the high of yesterday, if you want to try it. But I'm not so sure that the short side is necessarily going to be all that profitable here. I mean, I'm doing much better with some of my longs today, like LinkedIn. Yelp is cruising along. It's holding up okay. It's coming in a little bit, but I think you'd expect it. But I think this is powerful enough that it may shoot higher. That's kind of what I'm looking at. Trulia is continuing higher today, just barely. It's just turning green. Splunk is trying to come out of here. Look at even the noodles now. I mentioned it, and all you guys, you turn it blue here. Look at that. Anyways, it looks like it, but I think if you're buying it here, you're okay because your risk is pretty low. What do you think, Dr. K? Would you buy noodles here?
I would probably, in this, this market environment, we're still in a downtrend in the S&P. The Syrian situation to me is going to probably be bullish if history's any guide. If we start missile strikes, that in the past has been bullish for markets. But if it's not, or let's say the market continues its downtrend, it could be looking for an excuse to sell off and use Syria as that excuse. But on the other hand, if the market sells off on the Syrian basis, but we're seeing that leading stocks have held up well, then like you were saying, you could use that as an entry point for getting into some of these leading names. So it's always contextual to how leaders are acting. So I would say this: if the market's strong, leaders are acting strong, the model's on a buy signal, then I'd be more interested in a name like this, which is it's an IPO and it's going to be a bit volatile. If the market is say not so strong, but this thing can somehow buck the trend and clear that midpoint, and it does it constructively, then I might be buying into some strength here. But in a tentative market environment, we keep the position size on the smaller end.
Yeah, my take here, the way I would handle this is I buy the stock, and then now let's just draw a line across the top here. And maybe it's possible if you trade higher than, what is that, 521,000 shares today, and you're up off the 10-day, this could be considered a supporting pocket pivot today. So that's a possibility. So I might take a position here, and if it breaks out through this trend line, then I may go in and double it up. So and try to move it pretty quickly, looking for it to pop out of here. That would be one way to handle it. So let's see. Are you looking at any defense-related stocks, LMT? You know, I noticed Raytheon has been acting well. They recently won a contract for the Exo atmospheric kill vehicle, which sounds really cool, but it's just something that kills missiles using the impact of an object, not another missile, and it orbits out in space, so it's outside the atmosphere, exo-atmospheric. And they've done pretty well, and that looks good. Lockheed also has been trying to base. General Dynamics, you're seeing most of these stocks trying to base. The only thing, they haven't shown up on my screens primarily because the earnings are pretty tepid. Like, for example, Lockheed, negative 4% sales, 11% earnings growth, 0% estimate for next quarter. So not really thrilling me there. Now Raytheon up 4% in the most recent quarter. Next quarter they're looking for negative 16% growth, and sales in the most recent quarter were up a whopping 2%. So, you know, this isn't really the kind of stuff I'm looking for. So I haven't really played them, but I have to admit the patterns look good, and maybe it's because World War III is about to start. I don't know. Anyways, let's look at a couple of these RH home builders. You had a pocket pivot. Of course, the market's weak, so it, you know, but it hugs a 10-day line, and it looks okay to me. It looks to me like it wants to go higher. But I think I'm going to focus right now on techs and internets and biotechs. I think is where I'm going to be mostly. But this is acting fine too. Double L Lumber Liquidators is trying to come up off of the 10-day moving average. It doesn't seem to be having much success. Notice how it opened up earlier and it's coming in. You're holding tight along the 100 price level, which of course is that old century mark of that Livermore liked to buy stocks at when they came up to it for the first time. But you're not really getting any oomph from here. Lumber Liquidators has been going up for quite a while. Let's see if I can shrink this. And it's been going up for a while, so it is kind of late stage. You might consider it. So, you know, I think for my money, I like fresher merchandise. I like the flag and Trulia. You know, if you look at this, the stock, you know, formed this, but it came out of this long base. To me, this is a first stage base here. And so this is your second stage base, so it's a little earlier in the pattern. Yelp, for example, this was your first stage base, and you came up and broke out and ran up, and now this is your second stage base. So it's also a little bit earlier versus some of these other stocks that have been going for a while. And so I tend to favor things that look like somewhat fresher merchandise coming out of first or second stage bases, as opposed to things that have been going up for a long time. If we look at LinkedIn, here's your first stage base. It ran up, corrected, came out of a second stage base. So, you know, it's still got perhaps some room to the upside before it creates a third stage base. And it's acting well today with a nice big fat pocket pivot. yes, the volume from the secondary offering. Well, I don't think they're counting it because right now, if that's true, Dr. K, when 5.38 million shares on top of 3.9 million so far traded today, they're not counting it, are they?
Say that again. I mean,
Okay, it's LinkedIn priced a 5.38 million share offering last
yeah.
night
So
at
it looks like
223. They're
yeah.
not counting it today. So this volume is independent of that, it looks like to me,
I don't
which
know.
is odd.
I don't know if it might be it might include that. I don't know how they're
But how do you come up with 3.9 million total volume traded today when
usually that can happen sometimes where the volume is just really big on that day and it doesn't have to do with
the secondary?
normal
Yeah, so I
volume.
don't really think.
No, it could have to do with the secondary volume. That could be why it's so big. I've seen it before. It doesn't just all come out at once.
Yeah. Somebody
So
says, let's see. Let's go through some real quick ones. We're over an hour now. InventSense, I hate the stock, but that means probably going to go higher. You had several pocket pivots in here. 1, 2, 3. But it just kind of baby steps its way higher. There's some talk that they're having trouble ramping up supply for new iPhones or whatnot. So I don't know what to make of it.
If you play something like this because the base isn't finished forming, you'll notice though it obeys the 50 days. So you might want to use the 7-week rule.
Right,
And
exactly.
utilize the 50 day as your selling guide, but be prepared to be able to sit through it if it does head back to the 50.
Right. But, there's a couple of things here that I prefer other stocks. There's a couple of things in InventSense that would make me prefer other stocks. It's an $18 stock, for one. Every time it tries to get going, it doesn't really get any momentum to the upside. The weekly chart doesn't look all that hot to me. It's a little bit tentative. So, maybe it goes higher. If you like it and you bought it earlier and you're sitting with it, I guess there's nothing to do but sit with it. Anyways. Somebody asks, discretionary retail has been doing well lately. Do you think they've maxed out for the interim and recommend switching out of UA cores? No, I think they're all acting fine. So, there's really nothing to worry about there. These stocks, as long as they act well and continue to go higher, I wouldn't necessarily sell into the uptrends. I'd wait for some sort of violation. And I think even now with this one, you might be getting close to using the 10-day moving average, but it already violated it here, so maybe you could use a 20-day. I don't know. But I wouldn't necessarily recommend switching out of them. I don't know if that's necessarily a sound strategy. So let's see. Somebody says LinkedIn offering doesn't close until 9/10. Okay, I see that. So, nobody seems to be worried about it today. Anyways, looking at some stocks that are pulling in today. Green Mountain Coffee had a pocket pivot yesterday. That's a pocket pivot, just barely, and holding above the 10-day line, but still kind of sputtering a little bit. But if you bought on the breakout here, this might be considered an add point where you could add, I suppose. JCPenney is junk. I'm not touching it with a 10-foot pole. Why would you buy that? In a downtrend, no real buy signals, so leave it alone. FLT holding up in your opinion. I don't know if my opinion matters. It's holding above the 10-day moving average so far. So on the basis of if you were using the 10-day moving average as your selling guide, which I think you could here, it's hard to say. No, here's a violation here. I don't know. I think you're using the 50-day. So in the sense that it's holding above this breakout, it's holding up. So I don't think it's really a matter of my opinion. It's just a matter of what the stock's actually doing. And in this case, we can see right now it's holding the 10-week moving average. But again, let's think about this. This thing's had a long run. So maybe it's a little tired, Like I said, for my money, maybe I'm more interested in some of these stocks that are just getting going and are either have come out of seconds or first stage basis. You might want to focus there as a general rule. If you see something that acts well, be less specific about what group necessarily it's in. Although I do think I like technology, I like internet related. And I think some retail stocks look fine. So, restaurants, CMG, I notice moving tight sideways, now holding along the 10-week moving line. It's trying to move. Of course, we just talked about noodles, and it looks like we're all in there buying it and pushing it up. But that's the buy spot right there, and that's what I've been waiting for. and it looks decent there. So anyways, I don't really have anything else to add. I think we've gone over some decent stocks today, things that are acting well, and the fact that you're starting to see some percolation under the surface of the market that looks constructive, at least to me. And I'm long a few things. We'll see how it pans out. The beauty is the market's liquid, and if you take some positions and you don't like the way things are acting, you can always just blow everything out. Anyways, Dr. K, you got anything to add?
Yeah, I think the internals are looking better. So, the model is still in cash, so we'll see which way the wind blows.
Yeah, so anyways, and you don't need a weatherman to tell you which way the wind is going. Oh, last comment on metals. Well, there's nothing really to comment on. You had a pocket pivot breakout here on the GLD. Now you're pulling in. I think short term, either they're correcting and digesting these moves, or there's a view that tapering is going to occur, and on that basis, they are dragging some of these in. So, that's what seems to be going on. But that same thing with silver pulling back in. You know that these things are volatile. So, in my view, when you see the low put in, here's a weekly of silver, and here's the weekly of gold. You know these things are running into some resistance up in here. And so I don't think there's anything really to comment on in terms of what I think. I'm not long either one of these, other than being long physical metals from a long time ago. But I don't really see that there's some massive trend that's developing here. You still got a lot of overhead. You're still technically, I believe, you're still in a downtrend. I don't really see any of this reversing just yet. If you draw lines, if you like to draw lines, you can draw this, and there's nothing really breaking there. There's nothing really happening here. Maybe this downtrend, but that's a steep downtrend, has been broken. But these need way more time to set up. So, again, I think you're better off trying to deal with stocks. So I'm going to finish off with one last thought. Just watching Tesla, I'm looking for it to come into this 10-day moving average. So if we come into like 163, 164, that might be a spot to step in. But the market continues to go higher. I think Tesla, and Dr. K agrees, could continue to go higher. So, anyways, that's all I've got. Thanks for showing up, you guys, and we'll catch you next week.
So long, everyone.